Hey everyone, welcome back to another stock analysis night. And today we are going to be going over the biggest company in the world right now, which is going to be NVIDIA. So, for those of you not in the know about NVIDIA, right? NVIDIA, what is NVIDIA? They make AI chips. They have a gaming sector. They're making data centers, and big thing with NVIDIA is AI, and it's what's been driving NVIDIA to such a high multiple and such a high price. Okay, so what are the headwinds and tailwinds, and where do I see all this going, right? So headwinds, export restrictions, especially with the H20 chips to China, especially from this administration. The valuation concerns are a big one, right? Because of how high the valuations are and what people are expecting from it. Data center growth is slowing. Obviously, that is going to be a thing that we are going to see as the big companies have already spent massive amounts of capex to develop the data centers, and you don't generally need to spend massive amounts year over year over year on the same data center. Another thing is size. Generally, size wouldn't be a headwind, but it is a headwind in this case simply because to grow at the pace NVIDIA is growing at its current pace, at its current size, is it is really difficult. I'm sorry if you guys are hearing construction outside. Let me know, and I'll try to fix that for in the future with some soundproofing. So tailwinds, right? AI is a big one. Data center expansion, gaming, all sectors of NVIDIA that are growing relatively fast, and it is definitely something that we want to account for. Well, why has NVIDIA grown so fast, so quickly? And it is pretty easy to take a look at its revenue growth and to immediately see why it has exploded, right? 10-year growth rate, 36%. 5-year growth rate is what's really massive, and especially these last couple of years, that type of growth rate is what's been really carrying NVIDIA's pricing, with both its revenue and its earnings essentially becoming straight line up. All right, so we also get to margin and PE, right? So what part of the explosion in earnings is also because the margins are expanding now, right? With their actual not monopoly on chips, but how far ahead they are on chips makes it so that they are able to charge a lot more for the chips that they have compared to their competitors. I mean, they have a margin right now about 52%. The PE, on the other hand, right? The 10-year median is at 50, 10-year average is at 37, but right now it's a bit higher than that, and I do believe that they probably do deserve a slightly higher PE than at least the average. So where do I see NVIDIA being in 5 years? I do see possibly a 32% revenue growth, which would be a linear growth rate from here until for 5 years out, right? It's been exponential the last couple of years, but I do see growth slowing down to just being linear, right? Which is still massive considering how fast it's been going up. But I do see more of a linear growth rate and a sustained profit margin here with an NPE as people see it of where it currently is at level 45. This really gives it intrinsic price today of $318, which is pretty high. I'm not gonna lie, I came into this expecting to find a lower valuation for Nvidia, but I couldn't really justify giving it any growth lower than what I'm seeing here. And next up, let's take a look at the free cash flow. Once again, high growth, right? You have 55% 10-year median with a 71% 5-year CAGR growth. Price of free cash flow, right? Stable around 55 to 52. So somewhere in there is pretty similar. I'm going to say that, right, 30%, 32% growth, which is in line with the revenue growth, reasonable, right? With plus a 55 price of free cash flow, which is also in line with the median and what it's historically been. That gets us an intrinsic price of $340 with basically no debt to speak of. So this is all looking amazing. We do have one last slide to go over for to talk about the dividends, right? Dividend doesn't really matter. NVIDIA, if you're buying NVIDIA, you're not caring about that they gives you a 0.02% dividend yield. No one cares. So skipping over this, what do I think of NVIDIA? Right, uh, revenue is at 318. Free cash flow from my analysis, from what I believe, is at 340. A dividend, I don't care. Overall, because I did assume a linear growth rate, which means that in the short term, it actually would have a higher percentage growth rate. I do see Nvidia being essentially worth $360, which at the current price, right, it would be a buy rate. I might have to take a more look into this because this is really causing me some cognitive dissonance because I don't know if I believe that. Oh, I don't know. It is hard for me to swallow the fact that from everything I'm seeing, NVIDIA at such a high valuation, at such a high price point, is still a better buy in this market than possibly Facebook, Google, Microsoft. It's hard for me to swallow that, but from my analysis, that's where I'm coming out from. And I actually would think about putting in a buy order if the price comes down maybe just a tad more, or even at the current price, I wouldn't be against buying a couple shares of Nvidia, maybe a couple thousand, just to see where it ends up. All right, that'll conclude it for today. I know this is a much shorter episode, uh, much shorter video than what I've been doing recently, but I just didn't really have much explanation to do. A lot of things that people have explained about NVIDIA have already been explained. So that's where I stand. Let me know what you guys think of my analysis, if I'm making any flaws, if there's any other companies you guys would like me to do and to review. Thank you guys so much, and leave a like and subscribe if you enjoyed. Thank you.